Over the past 70 years, when the U.S. markets finish the month of January positive, they end the year positive 92% of the time. But with all of the rising global concerns, will the U.S. markets continue to stay on track, or will we see a repeat of last year?
We saw some volatility creep back into the markets last week, but the U.S. markets ended the week relatively flat. The S&P 500 was only up 0.05, and the Russell 2000 was up about 0.2. Now the Russell is leading the way for the year, up a little bit over 11%. Foreign and emerging markets were both negative last week, with foreign down just under 1.4, as well as emerging. Now emerging markets is leading the way, up about 7% for the year. Today we're looking at a chart of oil, and the reason we're looking at oil today is because during the President's State of the Union address, he mentioned how important it was for the United States to be one of the major exporters of energy. And oil is one of the major components of the energy sector. Here, we're looking at a 3-year chart of oil. Now normally, we look at shorter-term charts and shorter-term trends. But the longer the time frame, the more important these key levels get, and the key level that we're looking at here is 53. In early 2017, this 53 level acted as a level of resistance. Now at the end of 2017, we saw the price of oil break out, but at the end of 2018, we saw it fall with everything else. Now, today, we're back close to that 53 level again. If we see a breakout here over 53, that could mean a bigger move to the upside in the price of oil. And if we want to be one of the major exporters of energy, that could mean great things for the U.S. economy.
Oil was also in the news last week, as Venezuela has revealed that the sanctions against them put on them by the United States has cost their economy approximately $20 billion. Now, the sanctions against them is essentially saying the United States will not buy any oil from Venezuela, and we were their #1 purchaser. So now they're starting to scramble to try to find a buyer for all of this extra oil. Last week was the Chinese Lunar New Year, and initial economic data has come out in regards to how much consumer spending went on last week, as this is usually a time where there's a lot of economic spending going on, and it's actually been the slowest since 2005, showing that the Chinese economy is continuing to deteriorate. Another global news story from last week was that the European Economic Council slashed their forecast for growth in the Eurozone from 1.9% down to 1.3%. And this is just another piece of news coming out talking about a global slowdown. This week we're going to be focusing on 3 major news stories. The first being the final 63 companies from the S&P 500 report their 4th quarter's earnings.
Also, the U.S. and Chinese officials are going to be getting back together again to talk about the tariffs and trade discussions to try to get a deal done before the March 1st deadline. And lastly, Congress is going to be getting back together again to talk about the budget concerns to avoid another government shutdown.
Thank you for watching, and we strive to give you everything that you need to know about the markets in 5 minutes or less.
Like our Facebook page and share the video. Thanks.